Alright guys, so a new currency crisis is back and it's beginning to feel like 2022 all over again. The last time this happened, we saw mass liquidations in the markets. Big economies were getting clobbered and the world had enormous declines in major currencies. In less than 6 months, the Chinese RMB fell back to the lockdown levels. The Japanese yen also fell by over 20%. Big manufacturing economies suffered major currency devaluations. And it feels like deja vu all over again. The moment the Federal Reserve signaled fewer cuts in 2025, we should have all seen this coming. Now you pile on the fact that Trump wants to tariff the world, from China to Canada to the whole of Europe. Global trade with the US is about to screech to a halt. Now, this is going to compromise the flow of dollars into the global economy. It's a serious chain of events that will hurt many countries, especially the emerging markets. But that doesn't mean the US gets away scot free. Now, the US dollar has climbed to the highest level since 2022, and it pays to remember what this means. As dollars get more expensive, this throws a wrench into markets that operate in the reserve currency. Companies that borrow dollars now have their funding costs flying to the moon, and countries that have immense fiscal deficits are seeing their currencies plunging hard. Now, Brazil, for example, is facing a horrific currency crisis. The real has crashed 21% against the dollar this year, and the decline probably isn't done just yet. And because everything is still priced in dollars, imports into Brazil, they're going to cost more. Now, Brazil is the classic emerging market economy. They export more goods than they import in. However, because we live in a world where everything is just denominated in dollars, it causes big problems for companies trying to stay afloat. Now, this is a story about fiscal spending going out of control. It's also a story of the euro dollar markets and how global economies are slaves to the movement of the reserve currency. Powell's refusal of multiple cuts in 2025 is just the icing on the cake. The real problem is the incredible deficits being spent in Brazil to juice the economy up. As a result, the Brazilian real has been dropping like a rock since the start of the year. Unlike the US, countries around the world, they can't just run the deficits hot without consequences. It's a big reason why China is holding back on their stimulus until the trade war begins. Blowing a ton of money today could boost GDP growth, but it might backfire on the Chinese RMB. But let's understand the situation in Brazil for a bit, because it's a reminder to the world, especially the BRICS countries. There are big restraints on how you can run your fiscal policy because of the dollar system. The problem Brazil faces is Lula's insistence to run the economy hot. Now, we are talking about incredible deficits and spending to keep the voter base happy. And on the surface, it does look like the economy is booming. Over the past few years, GDP has been indeed growing by 3% a year on average. Unemployment is down to just 6.4%, one of the lowest rates in Brazil's history. It's a big paradox where the economy is booming but the currency is crashing. Now, the issue is incredible amounts of government spending. Investors all over the world, especially Wall Street, they hate that. Now, the US can get away with this because of the reserve currency status. China can also get away with this because inflation is so low there. But Brazil can't play the same game without damaging the currency. The economy is definitely big, but just not big enough. The deficit in 2024 was over 800 billion reals or 130 billion US dollars. But what's disturbing is the level of the deficit. It has hit 9.5% of Brazil's GDP, and that's even more than the US. Cutting down on this is going to be difficult as well. 90% of the budget is allocated to social benefits and pensions. Trying to slash debt is impossible, especially when Lula he insists on big spending to juice the economy up. And to save the currency like any other emerging economy, the only solution left is to dump your holdings of dollars, to sell off your stash in the open market and buy back your local currency, which is exactly what Brazil is doing. The central bank just spent $17 billion in a desperate attempt to rescue the currency. They dumped their holdings to prevent a further collapse in the Brazilian real. The central bank kept stepping in throughout the last 2 months, almost every week, We had billions of dollars sold to save the currency. But frankly, it's not going to work unless Lula brings down the deficit spending. And sooner or later, he has to, or interest rates will continue to rocket higher. Companies in Brazil, they're caught in a very bizarre trap. While countries around the world, they are dropping rates, it's actually going up in Brazil. The real has weakened by more than 20%, from 5 reals to the dollar to nearly 6.2. Interest rates have also rebounded up to 12%, and that's a real problem. Trying to borrow in dollars is getting extremely expensive, and local investors would rather throw their money into government bonds. Foreign money is also afraid to buy into Brazil because the real could collapse even further. Brazil's currency crisis is a reminder of how the dollar is the boogeyman in the global economy. Any weakness gets exposed when the dollar strength starts to rise. Now, does that mean Brazil's economy is going to collapse? Not really. They export 3 times more to China than to the US, so a shortage of dollars isn't really a problem here. Brazil can easily buy and sell stuff using the Chinese RMB. There's also the Mercosur agreement with the EU that just got approved, so Brazil can sell more food to Europe without any tariffs. However, we must talk about how more currency crises are on the horizon, especially when Trump's coming back into office. It's not even 2025 yet, and we are seeing chaos everywhere. Now, Trump has made it clear he's reshoring everything. US companies will be forced to bring production back home or face tariffs from the government itself.
If you outsource, offshore, or replace American workers, you're not eligible for any of these benefits. In fact, you will pay a very substantial tariff that comes in from another country, that's made in another country and comes in. There'll be a big tariff on that product because we want to make our goods in America, and most of them we can. My message is simple. Make your product here in America, and only in America. We are not going to be taken advantage of anymore, just as we made great inroads and progress 4 years ago. We made tremendous inroads on this subject.
And a big shout out to our sponsor today, Indigo Precious Metals. When it comes to buying gold and silver, I trust Indigo Precious Metals in Singapore. They have made investing in precious metals safe, fast, easy, and simple for both small and large scale buying. I've been stacking gold for over a decade now, and I've learned 2 things when buying. You want to buy authentic gold bullion, and you want to buy it at the lowest premium possible to stretch your dollars even further. And I'm glad to say I found both of this at Indigo Precious Metals. Indigo Precious Metals is a leading retailer in Singapore. They specialize in physical gold, silver, and platinum. They are my one-stop shop when it comes to buying bullion. Their prices are sharp, and they have the best brands on sale, and I can test the gold on the spot. So if you're looking to make your first gold purchase, Indigo Precious Metals is the best place to start. Whether it's 1 ounce or 1 kilo, this is the reputable dealer you are looking for. So take action today. Click on the link below and enjoy a discount on your first purchase with the code SeanFu. Start your gold stacking journey today. It's pretty straightforward what's going to happen. If more factories leave other countries, it's going to affect the flow of dollars. If factories in Europe, Asia, Mexico, or Canada move back to the US, obviously these countries will be exporting less. Production will stay in the US. And that would mean money will just circulate more around the country, in the country. Fewer dollars will be exported to the world as scarcity would increase. And this is the consequence of Trump's reshoring plan. Emerging market currencies have been dropping for over 7 years. Even as the Fed starts cutting in 2024, global currencies are still dropping. Now, the fear of Trump's tariff is freaking countries out, and capital flows back to the dollar, which eventually ends up in US bonds or stocks. Now, this sounds awesome for the US, but just like a pendulum, there's only a limit to how far the dollar can rise before the rest of the world starts to rebel, as if the threat of sanctions isn't enough. Now, Trump is very unpredictable. I'm sure many of us here are aware of the current drama, the debacle surrounding the Panama Canal. Trump really wants to claim the canal, and it's wow. It tells us that 2025 is going to be out of this world.
Because we're being ripped off at the Panama Canal like we're being ripped off everywhere else. A secure, He just said, take it back. And that's a good idea. The United States is the #1 user of the Panama Canal, with over 72% of all transits heading to or from U.S. ports. Think of that. So we built it. We're the ones that use it. They gave it away.
Now, this is crazy, but this is the timeline we are living in. This is our version of the multiverse. He might tariff Panama, or maybe he'll demand a discount or cut off the revenue from the canal. Now, if Trump can demand the Panama Canal and mock the president there, what are the odds of him hitting the world with tariffs? Definitely higher than 50%. So it's likely that a global trade war is coming. The consequences will be severe, and the currency crisis we are seeing is about to go global. However, just like the sanctions on Russia and the tech war on China, it's going to backfire on the dollar and US assets. Over the last quarter, big holders of US treasuries, China and Japan, started dumping their holdings. Investors in Beijing offloaded $51 billion, while the Japanese sold nearly $62 billion. Obviously, it was for different reasons. China, we all know, is opting out of the dollar system, while Japan is trying to rescue their collapsing yen. But the net effect is the same. Countries are limiting their exposure to dollars. Now, a common pushback we get is the dollar's dominance in global trade. If the majority of trade is settled in USD countries, they have no choice but to acquire the currency, right? Now, this is true in the immediate term. The world still needs to acquire dollars, and that's why global currencies are in fact falling. And the role of the dollar in global trade is extremely skewed versus the size of the American economy. The USD makes up nearly 70% of international currency usage, but the US economy is not even 30% of global GDP. China, on the other hand, is the exact opposite. Nearly 20% of global GDP, but the RMB is used less than 5% in global trade. But this also means for the dollar, there's a lot of room to fall, especially if Trump tariffs the world. As observers, there are two big trends we need to follow. The first is the rate of de-dollarization. How fast is the world moving away from the dollar in global trade? Now, firstly, we know over 50% of China's cross-border trade is in their local currency, the RMB. No dollars are involved. And in the first 8 months of the year, this has increased by 21%, hitting nearly $6 trillion worth. And if you're Brazil and you have a currency crisis, would you trade in dollars and devalue the real, or will you trade using the Chinese RMB? And the answer should be ultra obvious here. So a currency crisis might be horrible for emerging markets. It might clobber countries like Brazil, but it's actually a tailwind for de-dollarization, more fuel, especially when it comes to global trade. But there's another interesting trend we need to share. Asian exporters are starting to keep their dollar earnings outside of the US. In recent years, countries are moving their dollar reserves away from the Federal Reserve. And that's the green line that is stagnant. Even though the US current account deficit is growing, countries are parking their dollars elsewhere. And if you count the money sitting in Hong Kong deposits as well, it shows where dollars are flowing to. It's flowing to China. We could see a situation where Beijing starts letting out this dollar buildup in reserves to countries in crisis, and they might just accept RMB for repayment of the debt. And these are the undercurrents happening in the global financial market. The more Trump lashes out and the higher the dollar rises, the more the world will rebel. So while 2025 could unleash a new wave of currency collapses, we shouldn't lose sight of the bigger picture. The world has options and they are now exploring those. No one wins at the end of the day, not even the US economy. But let me know what you think. Can Brazil rescue the falling real? And will the dollar continue to crash global currencies? Let me know in the comments below. Stay safe. Be sure to smash the like button and subscribe as we navigate through these crazy times.